Okay, once again, I would like to specially welcome you to this session. It's an investment webinar, a very special one. If you know me, you would know that it's been a while since I did any kind of webinar. Okay, first, let me introduce myself. My name is Benjamin Aduroja. I'm a global wealth strategist. This is an assignment for me. It is beyond, how do I say it? A career. It's an assignment. It's a calling for me. To My assignment is to raise an army of wealthy men and women to teach and to show them how to make money legitimately. That's my assignment. It's a major assignment for me, and I've been running this for a few years now. Being faithful to the calling. Okay, so this webinar is an offshoot of that assignment. So we're looking at how to invest without tears. How to invest without tears. So I'm going to run for like 30 minutes, just to share a brief overview, and then we're going to have a very robust, Q&A. Just prepare your questions, any questions you have about investments. So prepare them. We're going to treat them tonight. By God's grace, be rest assured of real value. So we're looking at how to invest without tears, building wealth with confidence, clarity, and wisdom. So my unreserved apologies, I may not be able to share my screen. I've been having a little challenge with my devices all evening, and I may not be able to share my video too. Please indulge me, but I prepared slides for this session. So everyone that registered, you are going to get the slides in your email. You're going to get the slides for this session in your email. Be rest assured. Okay, so let's move on. How to invest without tears, building wealth with confidence, clarity, and wisdom. So before we begin, I want to quickly make a few assertions before we begin. So when it comes to investing, there are a lot of there are a lot of there's a lot of information out there as regards investing. And how do I say? A lot of people have have mystify. Let me use that word: mystify investment or investing, right? Mystify. So preoccupation tonight is to demystify it. So let me ask you three honest questions, please. If you fall into any of this category, just raise your hand. Raise your e-hand. Let me use electronic hand. Okay. So if you have ever lost money investing, please raise your hand. You've ever lost money investing, please raise your hand if you're here. If you've ever lost money investing, please raise your hand. If you've ever lost money investing, please raise your hand. Okay. Okay. Second question. If you're currently afraid of investing, please raise your hand. Okay. Okay. Thank you very much. Thank you. Six resources, Jeremy. Hey, okay. Thank you. Thank you. Thank you so much. Okay. You can put your hands down. Thank you. If you are currently afraid of investing, please raise your hand. You are currently afraid of investing. I had a meeting with a client yesterday. So he was one of those who invested in the stock market in the early days, in the pre global financial crisis. That was before the 2008, 2009 global financial crisis. So he invested heavily in stocks and shares. He bought a lot of stocks and shares in, I think, 2006, 2007. He said as soon as that global financial crisis happened, he said from that point, from that moment till date, he has not invested in the in the stock market. Can you imagine how many years that is? From 2008 till now. That's how many years? Wow, 18 years. 18 years. Can you imagine? So he said from that moment, he just lost interest in investing. He lost interest in investing. And, so we're trying to help him to go back into that. That was the essence of our meeting yesterday. Now, if the last question is you are unsure where to invest today, there's so many opportunities, or you don't even know where the opportunities are. Whatever it is, or whatever the case is, you are unsure of where to invest today. Please raise your hand. You are unsure. You are not sure of where to invest today. Please raise your hand if you fall into that category. Oh, beautiful. Thank you so much. Thank you for that. Okay, so tonight is your night. So let's move on. So candidly, if you answered yes to any of these three questions, you are not alone. You are not alone. And everyone who has ever felt uncertain about their financial, everyone, one way or another, has what felt uncertain about their financial future. So tonight is a very, very important night where we talk about investing in a very, very practical way. Very, very practical way. The essence of this is to ensure that in your investment sojourn, let me use the word sojourn because it's a sojourn, it's a journey. In your investment journey, you're able to what? You're able to make the most of your resources. You don't lose money. You don't lose money. That is the essence. You don't lose money again in your investments. Okay. So why does this session matter? Why does this session matter? Number one is that thousands, thousands of people, thousands of people, thousands and thousands of people, hardworking people, to say the least, lose money every year. Mm. Just think about that. Thousands of hardworking people lose money every single year. Not because they are foolish, oh, not because they are greedy. Mm. I wrote an article, okay, a promotion in promoting this particular session. I wrote, I did a write-up, and I was debunking some assertions that uh, people lose money because of ignorance or something, something, something. And I was trying to debunk that. And I said that, well, that if you were to talk about ignorance necessarily, that may not necessarily be the reason people lose money. I said that's not the real reason. I said in that write-up, I said doctors lose money in investments, professors lose money, professors lose money in investments. Professors, can you imagine that professors lose money in investments? It's really, really, it's really, really pathetic. It's really appalling. So professors lose money in investments. Just a minute, please. I'm trying to. Some people are asking for the link. Let me quickly share it with them. Just a minute. Thank you very much for your patience. Let me quickly share the link with them. Okay. So, okay. So I'm sharing the link with them now. Hopefully they'll see it. Okay. 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 So the real problem is nobody has really taught us how to think before investing. I want that to sink in. Nobody has really taught us how to think before investing. So our goal tonight is not to tell you where to invest. Our preoccupation tonight is to teach you how to think before you invest. How to think before you invest. That is the essence of this session. Now, let's talk about um, investing. I hope you can hear me. I hope you can hear me loud and clear. Okay. So, what is investing? What is investing? I would like to hear you in the comment section. Please, if can you give me your own definition of investing? Your own definition of your own definition of investing. So we are laying a background for the session as we move on shortly into the Q&A session. We're laying a background for the session. Please let me know your own definition of investing in the comment section, please. In the comment section. Thank you very much. What do you What do you define investing as? Please kindly share your own thoughts in the comment section. Kindly share your thoughts in the comment section. Okay. Okay. Please, in the chat session, in the chat room, please share your thoughts in the chat room. Okay. Okay. I'm having a little challenge checking the chats. Okay. So I want someone that is very bold to give his or her own definition of investing. What do you think is investing from your own point of view? Please, you can unmute your mic and share. What do you think investing is from your own perspective? What is investing? What is investing from your own perspective? Um, it's this is very intentional so that we can know because one way or another, each one of us has a paradigm when it comes to investing. In fact, when it comes to every issue of life, each one of us has a paradigm or an interpretation or our view on or should I say our definition, our own definition of subject matters. Okay. Okay, can anyone share? Do you have any opinion about investing? Hope you can still hear me loud and clear. Okay. So because of time, we'll move on because of time. So long story short, let me just give you a very simple, practical definition of investing. Investing is giving up money today to create more money tomorrow. Shaking up. Simple as that. It is giving up money today to create more money tomorrow. It's as simple as that. So it's like you delaying consumption now so you can create freedom later. You are delaying consumption now so that you can create freedom later. So it's not about deprivation, it's about intentionality. So that means today you are choosing to save and invest instead of spend. So you give your give your money time, your seed, you give it time. That is, your money grows through compounding and patience. And then tomorrow you gain financial freedom and lasting wealth. That is just it. That is investing in its simplicity. That is what investing is in its simplest form. Remember I said that this session is not a theoretical person. We want to make things as simple as possible and then to also ensure that we give real value. Okay. Okay. So now we talked about what investing is. Let's talk about what investing is not. Hmm. What investing is not. Remember, I'm going to share the slides with you via email. I'm going to share the slides with you via email. So be rest assured you're going to get the slides of this session via email. Okay. So let's move on. Let's move on. Okay. So investing is not gambling. It is not a game of chance. Or goro, like someone would say. It is not a game of chance. Investing is not guesswork. These are what investing is not. Investing is not guesswork. Investing is not following the crowd. Investing is not following the crowd. That is earning. A lot of people follow the crowd, and it's quite sad. A lot of people follow the crowd. They try to what? Be like the Joneses when it comes to investing. And in fact, one of the major reasons people lose money in investing is the crowd mentality. That crowd. Because and it's what people look, and it's a psychology. It's called social proof. Because Mr. Andy has invested or is investing in a particular investment vehicle, therefore, me too, let me plug in. Now, something is happening in the stock market now. Is a higher form of the hard mentality. This guy has plugged in heavily into First Bank shares, into First Bank. That's Femi Otedola, heavily. He has invested between last year and just 2 days ago, he has invested more than 1.44 trillion naira in the shares of First Bank, First Bank holdings. So, of course, that's good. That's a good sign in a way, because when you see someone a multi-billionaire, you know, plugging into an investment, right? It's telling you something. The person is saying something in that. But we must be very careful and wary of the herd mentality. Sometimes some of these sophisticated investors, they plug into it, invested, they pack it, raise the price, and then suddenly they pull out. Look at what happened to Geregu, right? Geregu is a vivid example of what Femi Otela, what a wonderful, amazing gentleman, what he can do and what he cannot do. He invested, he bought AP, I think was it AP? He turned it into 40 oil, and then packed it up, built it, built value, you know, uh, generated surplus value, and then he sold. He sold it. Now, from what his earnings from 40 oil, he poured into Gegu. We all know Gegu, right? I'm quite sure. I hope we all know Gegu. Gegu is it's one of the power transmission. Is it power gencos? Yeah. Power generation um, outfits. It was all of those owned by government before, but they uh, they sold it out to private investors. So Geregu, so he invested in Geregu, built it, built a formidable management. Then suddenly we had that he had sold. Just like was it a few months ago, he sold out of Geregu 750 million US dollars. That was what he cashed out from Geregu. So we cannot be following. No, of course, they say follow who know road, but you have to follow with sense, because they always have a game plan. They always have a game plan. Now, when I learned that Femi has increased his stake, because currently he has about 25% stake in First Bank, I've been thinking what his game plan is, because he has just 5% more. Should he buy 5% more of First Bank, he will now own about 30%. And once he owns 30% of First Bank, he has a right. SEC will give him the authorization to bid for the other shares. That is, want to buy out the other shareholders. He can buy out the other shareholders. Once he reaches that 30% threshold, he can buy out the other shareholders. Now, I've been thinking, so what is his game plan? When you want to know the game plan of someone, you have to follow precedents. How has he been behaving in time past, right? He bought this bank many years ago. In fact, at the point, he was the highest shareholder of Zenith Bank. The highest shareholder of Zenith Bank. He bought Zenith Bank many years ago. He sold out, he cashed out. And then at another point, right? At another point, he started buying Corp. He started buying transfer. He and this guy are not really on good terms. Tony Newman. So he started buying Transcorp, started acquiring the shares. You know, Tony saw it as what as a threat. Tony too started acquiring more shares. So it was now tiki taka. At the point, they now had a gentleman meeting. Tony was able to persuade the guy. Then your day, look at day by day now. Abba, waiting now. Why are you trying to, gain incursion into my turf? So one way or another, they were able to have a gentleman's agreement, and then he now sold out to uh, Tony. He sold his stakes in Transcorp. to Tony Illuminum, Mr. Tony Illuminum, sold the stakes that to Mr. Tony Illuminum. To cut the long story short, so you can see that there's precedent. So you have to what? Follow who know road with sense. We must not be able, we must not follow. So investing is not following the crowd. Now, investing is also not chasing miracles. Get rich quick schemes are not investments. Please note this. Get rich quick schemes are not investments. Please, this is very, very critical. If you are one of the things you are taking away from this session, please let this be what? One of them. Get rich quick schemes are not investments. So, like we said earlier, we said investing is very simple. It is you what? Taking out money, sowing it today with a what? The promise of a reward tomorrow. So, what is investing? Let's break it down further. Investing is planning. Every investment starts with a clear goal and a timeline. Every investment starts with a clear goal and a timeline. Secondly, investment is patience. Patience is critical when it comes to investing. Patience is necessary if you want to what? Gain real value from investing. Very, very. Some people are asking for a link. Oh, okay. Please, just a minute. I need to share the link. I don't know why they are yet to get the link. Okay. Okay, let me see. Why is this talk not going yet? I've tried sharing this link. Let me see if I can share it again. Okay. Okay, just a minute, please. Please kindly unmute your mic. It's just a minute, sir. I want to quickly share the link for this session with people. It seems to me that they have not, they have yet to get the link. Okay, let me share the link now. Okay. Okay, so let me share this. Just a minute, please. We'll continue shortly. Thank you so much for your patience. Okay, so let me just share the link now with people. I hope this would go faster. Okay, so let me share the link on another platform. Okay, so another place. Just a minute. I'll continue shortly. Some people are sending messages that they've not gotten the link. Okay, thank you for the patience, sir. Okay, let me share the link here too. Thank you very much for your patience. Okay. Okay, just a minute, please. Thank you for your patience. Thank you very much. Okay. Okay, so let's hope they get this as we continue. So I was saying, and I did say that investing is planning. Second, investing is patience. Investing is patience. Investing is patience because what compounds over time, not overnight. Wealth compounds over time and not overnight. Then, thirdly, investing is discipline. Investing is discipline. Investing is discipline. So, okay. The next one is investing is diversification. Investing is diversification. We must spread our risks across different asset classes and strategies. We must spread our risks across different asset classes and strategies. Last but certainly not the least is investing is risk management. Investing is risk management. You know, I've gotten to appreciate the import of risk management lately. You know, So I appreciate it more. Let me put it that way. So I had the privilege of doing a research some days ago. So I was studying the book by, it's like his memoir, a memoir of Hyde Mokwede. It was the group, you all know AIG, Hyde Mokwede, the former, group CEO of Access Bank. So in that memoir, he was talking about how they acquired and built Access Bank. So one of the things he talked about was risk management and the importance of risk management in investing. So, we all know what happened in 2004 when Solido came in as the CBN governor, and then suddenly, because of the banks were shaky, many of the banks, we had about more than 70 banks then. Many of them were not strong. In fact, at that time, the fourth largest bank in South Africa at that time, before the recapitalization, the fourth largest bank in South Africa was larger than almost all the banks in Nigeria then. So when Soludo came in as the CBN governor, he now decided to recapitalize, ask the banks to recapitalize to 25 billion, from 2 billion to 25 billion. It was a tall order. But the banks were able to, many of them rose to the occasion. They were able to, mergers, acquisitions, some went to the market, raised more funds, and then Access Bank to also raised funds, and then they began to operate and they became stronger. To cut a long story short, fast forward to 2007, and 2007. So they went to the market again. Other banks, the bigger banks went to the market again, and they raised 200 billion naira. 2000. So the banks now had a lot of cash. It was now the challenge they now had was too much money. The problem they had was how do we spend this money? Because they had a lot of cash at hand. Guess what happened? So they started, many of them started going into areas where they have no business go to. They started, entering, trying to establish branches in UK, going to African countries, establishing branches, and not, they were spreading themselves thin, giving out loans without proper due diligence. Now, in 2008, there's a reason I'm sharing this story. In 2008, something happened in US. There was a crash. There was a crash of the mortgage. There was what we call financialization, where they turned mortgages into derivatives, that investment derivatives. What that meant was that they started investing. Let me use that word, investing, turning mortgages. Imagine, because we don't have a mortgage culture here in Nigeria, but we have a mortgage culture in the US. So someone could go to the bank and say, I want to buy this house. The value of the house is 50 million naira. So you can say, okay, they ask him, how much do you have? Okay, I have 5 million. So the bank can borrow you the balance of 45 million naira. Then now pays across maybe 20 years, 30 years, 10 years, as the case may be. It has a long time to make the payment. So it would making monthly payments, and it spreads that payment across a number of years, and they clears it. Once it clears it, it becomes the real owner of the house. Now, guess what now happened? So some of the investment houses now say, okay, these mortgage products, we can turn them into investments that people could buy, right? So they now started turning them into investments and started selling them to, sovereign, investment houses, started selling them to different, countries, selling them across the world. And they now graded those, investments, those mortgages, the grade A, grade B, grade C. The grade C was the one they were not sure whether they will pay back. The grade A was, okay, sure banker, this person can make payments, can make the monthly payment. So the basis for this mortgage is sure. So the lower the grade, the higher the interest rates paid to the investors. Guess what now happened? Long story short, the demand for these derivatives now became so much that so many People were, asking for it. Long story short, they now started giving mortgages. Banks now started giving because they needed to meet the quota set by the investment houses. They started giving mortgages out to those who could not afford it. Imagine someone who was earning $10,000 being given a mortgage of $20 million. How in the world would he or she pay? They started giving out the mortgage to every storm they can have. Then at a point was now what? Default. These guys were supposed to be making payments. They now started defaulting. There was now a mass default across board. This mass default now what? Snowballed into a major crisis in the US. A major financial crisis in the US that led many, many people to lose money. Now, look at this. It had not suddenly Lehman Brothers. So suddenly, sorry, Lehman Brothers suddenly went bust. Then before this thing started spreading across the US economy. Now, what Imokwede, the group CEO of Access Bank, and his other management said, so they saw what happened in the US. Yes, this thing is happening in the US, so it's a major risk. We must not assume that it won't come to Nigeria. So how can we prevent ourselves, or how can we prove ourselves against this risk? So they had earmarked about $1 billion to be given out as dollar-denominated loans to entrepreneurs. So they cut that off. They said, no, let's keep this money because of what is happening. We don't know whether it will snowball into a global financial crisis. Long story short, that saved their head. They would have gone down the drain. This global financial crisis was what affected the likes of Oceanic Bank, the likes of there's an investment, and that is, and I've had it everywhere. The myth is that I need plenty of money before I can invest. It is a myth. It is a myth. I need plenty of money before I can invest. That is not true. And this is wrong. It's a wrong mentality. It is costing you. You don't become wealthy because you invest a lot. You become wealthy because you invest consistently. That is just consistency is the key. You don't become wealthy because you invest a lot. You become wealthy because you invest consistently. Starting small and staying regular is more powerful than waiting for the perfect moment. Time in the market beats timing the market. Let me say that again. Time in the market beats timing the market. So, like I shared earlier, I'm going to send the slides for this presentation. I'm going to send it out for those of us who registered. You're going to get the slides in your email. You're going to get the slides in your email. Apologies, I couldn't share. It's because of technical issues that I can't share my slides and my screen. But I hope you are deriving value. So, what is the wealth formula. What is wealth? What is the real wealth formula? Number one, you have to earn an income. That's just it. You have to earn. Earning an income is a critical bedrock of building wealth. Number two, spend less and save. Spend less and save. Number three, invest the difference. Invest the difference. And number four, repeat. It's very simple. Investing is no hard, and there are no hard and fast rules to invest. This concepts are very simple, but application is the real issue. These are the different commitments that each one of us has. Like they call it bukata. You know, I want to be very real, right? I'm being real. Of us have a lot of commitments, right? And it's quite difficult sometimes to follow these principles. Quite difficult to sometimes follow these principles. It is also necessary that we find a way to follow them. Earning income is non-negotiable, like I said. Spending less and saving is very, very important. Investing the difference and then repeat and grow. Okay, so what are the different types of investments? As I begin to round off my short presentation, I have quite a lot more to say. A lot more. I have the slides. My slides is about 35 to 40 pages. But I'm going to stop here because of time so that I can have your questions live and we tackle the questions and we will move on. This session has been packaged to have just very short presentation and a very long time of Q&A. So, what are the different types of investments? There is no single best investment. That's just the truth. Someone got in touch with me earlier today. One of if someone I really admire and respect, she's a fellow coach in my industry. We both belong to the Life Coaches Association of Nigeria. So she request. She sent me a DM, and okay, so please, so I had a very interesting question. Please, what can I invest in now? Apparently, she had just liquidated an investment that she had. I think that matured. So she had some funds to invest in. She just sent the DM. Can I, what would you advise me to invest in now? It's a very, very interesting question. I can't answer that just like that. There are different types of investments, but there is no single best investment. There are tools for every goal. You have to consider so many factors. Who is the person investing? What is your age? Age of the person investing is very critical. Age, the risk appetite of the person investing, the horizon of the person investing, the background of the person investing, how soon will the person retire? All of these things are very important questions. What are the goals, the financial goals of this person? They are very critical questions that we must ask before we can profile the most appropriate, investment vehicle for the person, right? I remember a client of mine some years back. So he said, he got it. I think I was having he booked some sessions with me, investment advisory sessions, and we were having conversations. And he said, okay, that he had a goal that he wanted to go to, go to school in the UK to do his master's the following year. This would be like 6 years ago, 6, 7 years ago. That he had a goal to travel to the UK for his master's the following year, and that he had some money that he wanted to push them into stocks. I said no. I said no, 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 no. Stocks is not the best investment. Your horizon is short term. That was what I told him. What if that money goes down? You invest in certain stocks and they go down the drain. The stock lose value. What would you do? I said, no, stocks is not the most appropriate, investment vehicle for this particular goal of yours. So we're able to help him to tailor the right investment vehicle for his goal. And he was able to achieve that goal. He was able to travel to the UK. So it is very critical to ensure that you know your like I said earlier, know your own, you need to be very, very certain about certain parameters which I have shared earlier. So I've shared that number one is your age. What is your current age? The older you are, the more conservative you must become. The older you are, this is a very important point. The older you are, in your 40s, your 50s, your 60s, the more conservative you must become, or you must be as regards investing. This reminds me of a gentleman who was about to retire. It's a true life story. I read it in newspaper some years back. He was about to retire. So he had his, entitlement coming in. He was to be paid 15 million naira. So he was looking for where to invest. He was looking for okay, where can I invest? What can I invest? Blah, 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 blah. So he went around, and he now got a particular, this was in the age, this was early 2000, 2020, around 2018, 2019. But life story. So, remember in those days we had these agri-tech firms. There were some firms that came, they were saying, okay, that we will aggregate money and then we go to we didn't have banditry then. We'll go to the interlands. They go into places like Benue State, inside the villages, empower the farmers, give them the money, buy the stuff for them, inputs, and then harvest it, and then sell, and then give the investors their return on investment. And it was a very return on investment. And it sounded like a very good investment product. So this gentleman, true life story, he invested 50,000 naira. So the promise of that platform was that if you invest any amount within 1 week, 1 week after that amount has been invested, you get double of your money. That they were making a lot of money. That if you invest today, within a week you get double. So this gentleman invested 50,000 naira, and within a week he got 100,000 deposited into his account. It was too good to be true. Okay, he put in 80,000 naira again, and within a week he got 160. Okay. So get what this guy now do is that okay? Before I invest, I need to investigate So it traveled all the way from Benin. It traveled down to Lagos. It went to Ikoyi, where the office of that firm was, to verify whether they were real. And he got there true and true. He saw them, they had the life office, very beautiful, they treated him well. He just wanted to verify whether they were real or not. And he saw that they had office, everything was working well. So now went back. Okay, I think these people are real. So he kept investing regularly, and he was getting the returns. Then he retired, and then they paid him 15 million naira. So your guess is as good as mine. So let me push this 15 million into this thing, and then within a week I can double this. So he put 15 million into the investment fund. 1 week, he didn't get the money back. What happened? 2 weeks. So the founders, because they had co-CEOs, that platform, that company had two co-CEOs. So they sent an email apologizing. They said, "Oh, so sorry, our platform, this and that, we're having some technical issues with our platform, blah, blah, blah. But rest assured that within a few days, we're going to get your money back." In fact, they even had an investment call. They, people asked them a lot of questions. The investors were able to ask them questions, and they answered, intelligently, and were able to persuade the different investors. Were able to persuade them, and people felt confident. Okay, I think it's just a temporary stop. Okay, let's expect. So they gave me time. The co-CEOs gave me time. I said, okay, by so and so time, you are going to get your money back. And okay, guess what? That time came and went. That time came and went. The money didn't come back. So this man Kuki rushed from Benin. He rushed down to Lagos. What is going on? Where's my money? On getting to their Ikoyi office, he realized that they had packed up. They had packed everything out. He couldn't find a trace of them. Those two gentlemen, the co-CEOs, they ran to Holland. They ran to Holland. That's how they took the money, billions of naira of investment funds, of investors' funds, took it out and took it away. So you can see that this gentleman was in his mid-50s. He poured his life savings, his means of livelihood, his entitlement, what he had worked for 35 years more. He poured it into a high-risk, high-yield investment. And then he had himself to blame at the end of the day. True life story. It was in the news. True life story. So we have three kinds of investments. We have low risk, low yield investment. I'm going to shut down now and we'll have our questions and answer session. Low risk, we have treasury bills, we have commercial papers, and we have government bonds. Then we have medium risk investment. A lot of people don't know the difference between these investments. That's why they fall prey into to certain elements. Then we have medium risk investment vehicles. In this category, we have mutual funds, stocks, dollar investments, and REITs, real estate investment trust. That's what we call REITs. Then we now have the third category of investment is high risk, high yield investments. High risk, high yield investments. In this category, we have real estate. Please, real estate is the high risk, high yield investment. Please note this. Private businesses is a high risk, high yield investment. Gold, investing in gold. That that the returns are high, but the likelihood of failure is also high. We can put them in this category. So we have low risk investment, medium risk investment, and then we have high risk investment. Top. I'm going to say in my in the what they call it in my slides. You're going to find everything is 30 pages. I'm just on number 10 now, so because of time, I may not be able to go into all the details. So in the slides, you're going to get the slides in your email. Um, Most likely this weekend, you're going to get the slides in your email. So let me just quickly say this. If you are in the retirement age, right, you have to focus on low risk and medium risks. You are approaching retirement or you are in retirement. Low risk and what? Medium risks. Low risk and medium risks. So then secondly, another thing I want to encourage us is you need to have an emergency fund. As you are investing, you need to have what? An emergency fund set aside. In case the investment goes wrong, what are you going to fall back on? So you need to have an investment fund saved up. Then you also need, if you have children that are within the age of school and all that school age, maybe secondary school, university, and all that, you need to plan for them. Save and invest towards what an education fund. There are different kinds of education fund. Then passive income, invest for passive income, and then also endeavor to try and own, although a house is not necessarily an asset, it can be a liability too. But one of the things it does for you is that at least it prevents you won't be paying rent. You won't be paying rent. So a house will be a very good way of what limiting your outflow. So I'm going to stop here for now. There's so much to say, but I'm going to stop here for now for time. So, and I'm going to welcome your questions. So, we have officially entered the question and answer session. Please, if you have any question whatsoever, any question, kindly raise your hand. Um, Raise your hand. So we are going to speak. Each one is going to speak, and then um, I'll be able to answer your question. Any questions about investment whatsoever? Okay, just raise your hand and I'll call you. Any investment, maybe you want to ask a question on what I've shared, or you have some certain um, questions that have been boggling you over time and you are looking for answers to them. This is the time for you to answer or to ask those questions. Please go ahead and what and ask your questions. Thank you very much. Please go ahead and ask your questions. Please go ahead and ask your questions.
Are you able to see the chat? There's a question in the chat.
Questions, please.
Good evening, sir. Good evening.
Questions?
Yeah, I have a question.
Anybody? Questions? Please feel free to ask your questions, whatever they may be,
Good evening, sir. I have a question.
in any area. Please feel free to ask your question.
Hello, can you hear me? I said I have a question.
Please raise your hand. Do you have any question about investing? Any questions about investing?
I don't know if you can hear us. Someone is saying he has a question. It's maybe a general audio problem.
Okay, can you hear me loud and clear now? Hello?
Yes, we can hear you.
Oh, my apologies. My AirPods misbehaved. Please go ahead. Please ask your question, sir. Your name and then your question, sir. Thank you very much.
Okay.
My name is Aduroja Adewale.
Okay, sir.
Hello, can
Please
you
go
hear
ahead with
me?
your question, sir. We can hear you loud and
Yeah,
clear,
my
sir.
name is okay, thank you. My name is Aduroja Adewale. The first question I have is about mutual funds. I really don't know how it works. And although I've gotten counsel as regards the mutual funds that it could be used to plan for short terms in case for issues for things like rent or school fees. And you can easily is the word liquidate, or that is get your money back when you want to use it for short notice. But I would appreciate if you could shed more light on that. Thank you.
Okay. Your second question? Your second question? You said you had two questions. Okay. Can you hear me? Can anybody hear me? Hello?
Yeah, hello, sir.
Anybody?
My second question has to do with stocks.
Okay.
How possible is it for we in Nigeria to partake in the stock, is this stock exchange in a foreign country and still be able to manage it and assess it while we're in Nigeria?
Okay.
I don't know if that makes sense. So I think I would like to know how we can invest probably in stock or shares in foreign countries and still be able to manage it from this end. And if there's any dividends or any returns, we'll be able to assess it. Thank you.
Thank you so much, Mr. Adeshola. Hope you can hear me loud and clear, sir.
Yes, I can.
Oh, beautiful.
Yes, I can.
Beautiful. Okay, beautiful. So I'm going to answer the questions from a very different paradigm. One of the things that I'm an advocate of is that you have to be very intentional about your life. Very intentional about your financial future. Don't invest because of what people are saying or what people are saying. I'm going to define this, but I just need to quickly lay this background. It's very critical to invest intentionally and with knowledge. So to answer your question, mutual funds are professionally managed investment vehicles. They belong to, I think I shared it in my presentation. They belong to the medium risk. Just a minute. We're going to get the slides. They belong to the medium risk category. So this is when, for instance, you don't know much about investing. You don't know much about stock market, and you don't want to lose money. You don't want to just invest blindly. So you now look for people, professionals who understand the market, who understand how to play the market and make money. And you say, okay, please, or in any other investment instrument that you use, because there are different denominated, there are different kinds of mutual funds. Some are focused on stocks, some are focused on dollar, some are different kinds of investments, as regards mutual funds. So there are different kinds of mutual funds. To cut the long story short, it is you now say, okay, I want to give my money to a professional in a pool of funds. So these professionals manage a pool of funds. Those people plug into the pool with their own fund, right? So they usually have, okay, this is interest rates. And these interest rates they fluctuate. It can rise, it can fall, right? It can rise and it can fall. So it's pegged with the certain, the current prevailing interest rate. So, and there are different kinds of rates depending on the volatility, or should I say the risk of the mutual funds. But by and large, it is you giving your money and putting into a professionally managed pool of funds. Now, there are some certain things you must note about these mutual funds. Number one, the professionals will say, okay, you are giving us your money, but we are going to charge you. So they charge management fees. They charge management fees. It may look small. It can some will say 1.3%, 1.32%, depends, right? They charge management fees. Number two, they charge success fees. There are different fees they charge, right? They charge different fees because they have to maintain the stock. They also need to maintain themselves. So they charge. So you are going to pay them. You are going to pay them. So they are going to deduct those fees from the pool. So whatever you are getting, of course, you may get, but be rest assured that you are paying these people management fees and some other fees. And sometimes those fees can be so crazy. It may look small, but by the time you look at the how do I say it? You look at the cumulative effect. Imagine 1.32% of 1 billion naira, 1.23% of 10 billion naira, 1.32 or 3.8, whatever it is, of 20 billion. It's a lot of money. It may look, the percentage point may look small, but it's a lot of money. So mutual fund, you plug in, when you invest in it, you say, okay, professionals, please let me plug into this fund and take my money, manage it. So you can pull out of it at any time, right? You can invest as low as 5,000 in some mutual funds and then build it up. You can build it up from time to time, depending on your goal and your horizon. And there are different kinds of mutual funds, like I said earlier, depending on your goal and your horizon. Now, the foreign stocks. So it is very possible to invest in foreign stocks from here in Nigeria. There's certain platforms that offer that opportunity. They offer the opportunity for you to plug into certain stocks that are traded in the US or in other climes of the world. So you can plug into them once you register on those platforms. One of them is Bamboo. There's a platform called Bamboo. I think they do that. You can buy shares and all that. So it's very good, but I have a little caveat about it. My caveat is that you have to be very, 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 like I said, intentional, because you have to know your portfolio. It's not about you having an investment portfolio. Okay, 50% of my portfolio is going into a low risk, low yielding investment fund. 30% or 40% is going to medium risk, and then the remaining 10% is going to high risk. But people don't do that. They don't do portfolio management. They don't do a proper portfolio analysis to know, okay, remember I said that based on your current reality, your age, your risk appetite, your financial goals, so many other factors that will put into place. to determine your, because there's no one size fits all when it comes to investing. It is you. So your own investment portfolio, your portfolio, management, or actually portfolio, investment portfolio will be different from someone else's. For instance, someone who is in his 40s cannot have the same investment portfolio, range with someone who is in his early 20s. The person in his early 20s can have more of his investment in the high risk because he still has time. So these foreign stocks fall into high risk, high yield. They fall into high risk, high yield. You can plug into them, but ensure that it's just a small part of your investment portfolios that is going into that. Okay, I hope I've answered your question.
Yes, sir. Yes, sir.
Okay. Okay, more questions? Any other question? More questions, please? More questions? More questions? You can raise your hand and ask your questions. We have like 15 minutes more before we come to call the session a wrap. 15 minutes more. So questions, any questions whatsoever when it comes to investing, please ask your question. The essence of this session is to serve and to add value. That's the whole essence. I don't know why, because there was a lot of like a tussle. This session shouldn't be holding, honestly. There was so much. My devices stopped working. The internet acted up. So many things that would have discouraged me to not have this session. But I thank God that He helped me to have this session. Okay. So more questions. While we await more questions, let me just share this. I talked about two instances where following the herd results into loss. So there was a client. This was a few years ago. A client actually reached out, but she reached out after the deed. Guess what happened? Our younger sister, this client was working in a bank. So our younger sister, convinced her to invest in a particular, like you remember I told you that anything that is quick get rich quick scheme is not an investment. Remember I said that earlier. So this lady told the client to, okay, why not invest in this? You know what? Just plug in, invest 5 million, plug in 5 million, go to the highest level, and then within 3 months, you get back your returns, you get back 10 million. This is a true life story. 10 million naira. So this lady's antenna just went up. Oh, 10 million from 5 million. So guess what she did? And it's quite sad, but it's real. It's true life story. She was working in the bank, so she now dipped into a customer's account without being authorized. She dipped into one of our customers' account and withdrew 5 million naira. Because she thought, okay, so short term, sharp, she will return the money and then she'll be able to have 5 million extra. So she dipped into a client's fund. This was quite a number of years ago. Dipped into a client's fund and then poured that money, 5 million, into this investment. Guess what happened? 6 months after, she now had issues with the client, with the customer, the bank customer. They had to be negotiating privately. She had basic on her head. She was negotiating privately, pleading with the customer to, this and that, and having a payment arrangement. The thing went down the drain. Why? Because of the herd mentality. Oh, because someone is investing in this, I must also invest in it myself. Okay, the second one I was sharing was the MMM, right? I was talking about the MMM. Someone I respect a lot, introduced it to me. And that's people are making money. So I asked the person a question. I said, very simple question. I said, what is the investment model? What is the investment model of this investment? This so-called MMM. So he now sent me a long epistle. I read it and I couldn't find anything significant. So I didn't invest in MMM. Thank God I didn't. Because they lost money. People lost money. So Mr. Bamdele was trying to unmute his mic. Do you have a question? Mr. Bamdele? Do you have a question? I thought you wanted to unmute your mic. Third instance, last year, was it? Okay, 2 years ago, a brother in church was trying to introduce me to an investment platform, a crypto-based investment. Now, please note this: there are so many crypto-based so-called investments now. So many crypto-based so-called investment now. So he brought it to my attention, explained it to me that it's very secure, this and that. That you have to download two apps. That there's a security. He gave me all the security architecture. It was very, very, how do I say it? Very, very enticing. And now showed me his own portfolio. He said what you do in that investment is you invest in dollars. So there's a particular, I think it's I've forgotten the name. So you invest in dollars, really. So you buy in dollars and you invest in dollars. So your money is converted to dollars, this blah blah. Your money is converted to dollars on that platform, and then you can now. And they add to it. Once you put, let's say you put $1,000, they double it to $2,000. So you start increasing, generating interest, and then it becomes $2,000. So by the time this guy was introducing this investment to me, he had more than $10,000 in that investment, as in 10,000 real dollars that he had put in. So he said, in fact, he wanted to increase it more because he had a goal, he had a target, this and that. This was December. This was December. Yes, he was trying to do this December 2024, early December 2024. So he told me, in fact, he helped me to download those apps on my phone. I downloaded the apps, checked them out. He said I should plug in. I could start with $200, blah blah blah, this and that. Okay, I said no problem, because this person was investing and I could see. He showed me dollars. He showed me the dollars. I was very impressed. But one way or another, I did not invest. One way or another, something happened that required my funds, so I couldn't plug into that opportunity. I wanted to, but I couldn't. So I had to let it go. Long story short, I now saw this brother about 6 months later. This was in June. So we now met at a forum. We met at Men's Hangout last year. July. Was it July or August? We met at Men's Hangout last year. And I was ready to ask him. So when we had the private moment, I now asked him, I said, oh boy, you must have built 3 houses now with the way this your investment is going. And I said, he said, whoa. He said, that's December. He said, last year December was not December at all. I said, what happened? He said, do you know that those guys, I just noticed that I wanted to, he was telling me this, I just noticed that I wanted to log in into into the app and to check my portfolio, and I couldn't log in. I sent them emails, I sent them even messages on Telegram, and they now said, sorry, we're having technical issues, this and that, blah, 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 blah. Okay, you know what? Invest $1,000 extra, and then you'll be able to gain access. He said that was when he started, his antenna started raising, these people must be fake. So he now replied them and said this and that, that he has about $10,000 with you. Why should he put additional 1,000 to get his money back? Blah, blah, blah. Long story short, just found out that he just disappeared from Telegram. He couldn't trace them. They disappeared from Telegram. That was how he lost more than $10,000 in that investment. True life story. True life story. So we need to be very, very intentional. So my preoccupation with this session is that we have to be very intentional. Number one, you have to know who you are. Be very true to yourself. Know your current financial reality. That's number one. Number two, what is your current age? What is your current age? Are you in your 30s, your 40s, your 50s? Then your age will determine the kind of investment you plug into. And your rate, your degree of exposure in those investments. Someone who is in his 60s and he or she is investing 80% of our funds or 90% of our funds in high-risk, high-yielding investments, which a lot of people do today. High-risk, high-yield investments. The person would lose the money one way or another. And that's one of the major reasons people lose money, because people don't gain clarity as regards what their investment portfolio should be. do I put 60% of my investment or investable funds in low risk and then 30% in medium risk? Remember, I shared the different components of those vehicles with you earlier. I'm going to share that with you in the slides. So, and then maybe 10% in high risk. We're not saying you don't invest in high risk. I'm saying that you have to what? Tailor that to your current reality. Your financial goals is very important. Your short-term goals, your medium-term goals, your long-term goals. They should determine the kind of investment you enter into. And don't allow people to sweet talk you into certain shady investments. If it is too good to be true, please know that it is too good to be true. Something that is promising 30%, 29%, 30%, 35%. And you are trying to look at how they make money and you can't find out. Please be wary. Someone, as I begin to round up, someone shared an opportunity with me some months ago. I think someone he knew was introducing him to a particular platform to invest in the platform. It was a crypto-based investment. So the person now asked me to attend the meeting. They were having like a town hall meeting to talk about the investment and to ask people to plug in. I think it was $500 or $200. I can't remember how much was the minimum investment. So I plugged in. And they now explained the investment. I was just looking at it like this. I said, this is money. This is one chance. I just kept quiet. I couldn't ask questions because if I asked questions, I'll be spoiling market for them. I couldn't ask questions. I just kept quiet. It was one chance. And what they were trying to use they were trying to use the bread to pack people's soup was that it is based, the investment is based, someone in the US was almost started the investment, is an American, is a white, it showed is the CEO, so person is also the CEO, COO. They showed white people. So what? White people. So, and they now explained the investment. It just didn't make sense. It didn't make sense. And people, they were expecting, of course, and I know that people would plug into those platforms. So we have to be very, very careful of the kind of platforms we expose ourselves to and the kind of risks. So I'm encouraging serious risk management when it comes to investment. Embrace risk management in investment. Okay, so it's been a wonderful time. It's been an amazing time. Thank you so much for plugging in. In spite of the odds, we had this session. And I give God all the glory for the privilege to have this session. It was something that was dropped in my heart some weeks ago. I wasn't planning for this. It just dropped in my heart that I have this session. And I tried to shy away from it, but the Holy Spirit said, we have to do this session. And that's why we're having this session. In spite of all odds, you can't imagine. I don't want to bore you. A lot of odds tried to prevent this, but God has made it happen, and I give him all the glory. So thank you so much for plugging in. If you'd like to plug in, so I do investment advisory. So I'll be having a group coaching session, group investment coaching session starting in August. You can plug into that. It's going to run for like 7 weeks. You can plug into that. You can private chat me. Some of you have my number. You can plug into that. It's not expensive, but it's something you're going to pay a token for it, but you can plug into my group coaching, my group investment coaching session. We're going to run for 7 weeks, looking at different investments. What we have just done is just it's too small. The investment is very broad, but in that coaching, we're going to extract the different investment classes. Everybody will be coming out with a real investment plan at the end of the 7 weeks period. And if you want to plug into my one-on-one investment advisory, that is also available. So that's a 3-month program. 3 months, just you and I, extracting your investment, you gaining clarity in investment and you making good money in your investment. So that you can also plug into that. You can private chat me on 070 3784 5008. Again, 070 3784 5008. Okay, I also have a product, investment product. You can also buy that. I'll send the link via email. You can also buy that. And I'm going to share the recording of this session with anyone that buys that investment product and who plugs into any of the different programs I've shared, the group investment coaching program or the one-on-one coaching program. On this note, we've come to the end of the session. Thank you so much for plugging in. I'm deeply grateful for those of us who have waited till the end. So I can note you now, so I can see you. So you are going to get an extra goodie for those of us who stayed till the end. We're going to get an extra goodie via email. Thank you so much. God bless you. You have a wonderful night rest. Bye for now. I hope you got value. God bless you. Thank you so much, sir. God bless. Bye for now, sir.